Everywhere you look on YouTube, everybody's talking about an impending crash or that the stock market is crashing or it crashed today, and it drives me absolutely insane. So in this video, I'm going to break down what exactly is a stock market crash and what's a correction, what's the difference, and also a recession. Not only that, but I'm going to also go over whether or not I think there's going to be a crash this year. And I think a lot of people are freaking out over a whole lot of nothing. Stay tuned. What's up, everybody? My name is Brad, and this is Own the Chaos. The stock market is crazy and chaotic, and we've made it our mission to help you own it. So if you want to see more videos related to the stock market investing, hit that subscribe button, hit that thumbs up, and let's get started. All right, so in this video, we're going to go over recessions, crashes, corrections. What are they, and why do they matter? And because we're starting to see some of the hysteria going around. Everybody's running around with their chicken, like a chicken with their head cut off, thinking the sky is falling because every time they see a red day, it's like, oh, the market crashed today, and it's driving me absolutely insane. I see this on YouTube all the time. Everybody's talking about how, oh my gosh, we've had 2 days of red, the stock market has just crashed, and it's like, no, you have no idea what a stock market crash is. Pullbacks are healthy, folks. You're gonna have red days and green days, but an all-out crash, and people just throw this word around all the time, it's not the case. And so we're gonna go into that right now. So a recession is an economic term that refers to a general slowdown in economic activity, generally defined as 2 consecutive quarters of negative GDP growth. Much like what we saw during the pandemic, right? We've had 2 solid quarters of economic slowing, and so that it classifies as a recession. We also saw this back in 2008 during the housing crisis, and so those are what would be classified as a recession. Now, sometimes and oftentimes and all of the time, a recession also brings about a crash, which is also what we saw. And I'm talking about a full-blown, all-out crash. And a stock market crash is a sudden drop of stock prices either throughout the entire stock market or in a specific sector. The crash of 1929, which was followed by the Great Depression, is one of the well-known examples. And we saw this during the pandemic as well, right? We saw the Dow Jones, the SPY, or the S&P 500 all crash 30+% within a very short period of time that led to a recession. Now, a correction, okay? A correction is just that, is a correction in the markets. Maybe there's something that is short term that's happening in the markets, and we see a little bit of a sell-off or some profit taking or what have you, and there is a correction. A 10% correction is usually what we see from there. Anything higher than that is going to potentially bring on what we call a crash, and it really kind of depends on what time period we're looking at. Is it a short time frame or long time frame? But corrections are normal and healthy. A correction refers to a fall in the overall stock market, a specific index or individual stock, generally of at least 10%. And we just recently saw this, right? Tech went absolutely crazy over the last 10, 12 months, and the NASDAQ or the Qs pulled back significantly when we looked at the Dow and the S&P as they kept rising because that specific sector was correcting because it was extremely overvalued. Now, again, that is not a crash. It is simply a correction, and it's quite healthy for the stock market. A lot of people think that that was just, oh my gosh, my accounts are crashing. I don't know what's going on. The stock market must be crashing. We're in for it now. That's not the case. The fact of the matter is that some of those people were probably just over leveraged in nothing but tech. And so, and admittedly so, I was pretty over leveraged in tech as well and didn't have a good enough balance in my account. So I was hurting over the last month or two as far as that's concerned, but it's just a correction, folks. Things come back after corrections. They always do. It's not a crash. It's not something like we saw back in March of 2020, which was indeed a crash. Now, are we set up for something like this again to happen in short term this year? And in my opinion, I say no, but I will give you 2 reasons as to why I think we could see sharp corrections in just a second. But the reason why I don't think we're going to see a crash is because, first of all, it's never happened 2 years in a row. We've never seen a stock market crash happen 2 consecutive years ever. Now, I'm not saying that history is going to always predict the future, but we use history a lot of times to try to help us at least predict where we think it might go. So we've never seen that before. We've also never seen the amount of money coming into the markets and economic growth like this and experience a crash amongst all of that. So I don't think that that's going to happen either. And there's so much tailwinds going on with the reopening plays, jobs are coming back, all that good stuff. There's no reason to think that the stock market overall is going to crash unless, and here's the two reasons why I think we could see sharp corrections, and I still don't think that this would constitute a crash. Well, one of them will. The pandemic. If we see an increase in cases, especially if we see some variants that aren't really responding well to the vaccine, and we see more hospitalizations and things start to come back as far as maybe a second wave is concerned, we could see a potential crash as far as that's concerned. I don't know if that really happens. I think that we are still in some pretty good shape. Obviously not out of the woods, but that's definitely on the table. The other thing is here is, in my opinion, I think that if we do see a corporate tax increase, which is what the Joe Biden administration is proposing, that I think we could see a strong correction amongst a lot of equities, specifically within tech. So if you guys don't know what's going on, the Biden administration is proposing a tax hike on corporations up to 28%. Right now it's at around 21%, which is a pretty good spot for it to be in. This helps companies grow, it helps their bottom line, and then effectively it helps their P&E or their earnings. And so when you have great earnings, people want to buy your stock. If your corporate taxes go up to 28%, then you're going to be significantly impacting the bottom line. And so that's what a lot of people are nervous about as far as the tax hikes are concerned. So if something like that does go through, we could potentially see a correction. Now, what I will say about that is that there is a lot of opposition on both sides of the aisle here. So I think that we're still a long ways off from getting approval of a 28% tax increase from the corporate tax increase. So I think that that's still very much far off. So in my opinion, I think that the stock market is going to continue to roar. I think we're going to see all-time highs continue in 2021 and probably leak into 2022 as well before we see a leveling off. I don't think we're due for a crash anytime soon unless something unforeseen happens, like another pandemic, right? So the market itself, consumers are buying, jobs are coming back, people are getting healthier. So I think, in my opinion, there's no indication that we see a crash at all in the 2020. So that's going to do it for me, guys. Let me know in the comments below what you think. Is there a crash coming? Are you bearish? Give me some reasons as to why. And I would love to hear from you guys. Other than that, make sure you're hitting that like button if you got some value out of today's video. I certainly would appreciate it. And subscribe if you're not already. Guys, that's going to do it for me. As always, I will see you before the bell. And B Smith is out.